Okay, so in today's video, we are going to go over a concept called liquidity, what it is and how you can use it in terms as an added confluence when taking smart money concept trades. So liquidity, simply put, is just money in the market. This money comes in the form of orders and stop losses. So that is the actual definition of what liquidity is. It's simply just money in the market. So how does this help us, right? So knowing this allows us to paint a picture or tell a story of where price has been and where price is likely to go. Essentially, this confluence is like a storyline of what price has already done and what price is looking to do, and you can use it as an aid in telling the story of the trade setup you have in mind. Now that we know what liquidity is and we've gone over a formal definition of it, let's have a look at the types of examples of liquidity that we can potentially see when taking trades. So there's actually around 4 types, and I'm going to draw them all out on the screen for you right now. So the first type, this is a more bullish scenario. So it's something like this. Okay, and in this scenario, we would have liquidity trapped around here. So let me just mark that as equals. So that is the liquidity. So we call this equals because the second leg doesn't purge or doesn't go higher than the first leg. And what this does is it creates a liquidity pool of where money is trapped in terms of stop losses and orders. Okay, now that's the first example. Now the second example will be in a range bound market. So something like this, right? Where market is ranging, where it's consolidating, and in this scenario we have liquidity trapped here and we have liquidity trapped here, right? So now this makes sense, right? Because now think about it, how many times have you been trading a range market and you get stopped out? It's because liquidity is being built here, price fakes out, grabs the liquidity, pulls back in and continues ranging, and it does the same to the downside as well. And that's why we've all come across this and have lost trades because of this. So that's one, that's two. Now our third example is basically similar to the example above here. It is the bearish case, so where you get a bearish equals. So it's like this, there's our equals, and there's our liquidity pool stuck below. And finally, our last type of liquidity that we are likely to come across, and we've all come across it before, we maybe just didn't know it, it is called trendline liquidity. And now a bearish case is like this, and then you have liquidity stuck here, there's your trend line, and then you have liquidity stuck here as well. Okay, now so you could say, don't we have liquidity stuck on this side? No, because as price goes up, wherever these orders are taken out, right? And same thing here, but as price goes down, but orders are left here, sorry, this side, right? Bang, 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 bang. Yeah, so there's your liquidity there. Okay, so these are the types of liquidity. This is the type of liquidity that you're going to come across when you're trading. You've probably seen it before, you just didn't know it, and you didn't know what it was there. You probably thought it was a trend line, or these are generally not seen, and that you're looking at as a consolidation box. Now let's have a look at some real examples of liquidity and how we can use it in taking trades. Okay, so let's have a look at this example. So this is actually an example from today. I should release this video today as well after I've edited it, so this would actually be quite informative of how I trade and the opportunities that I look for. So we come to the charts on the 5-minute time frame, and we have this structural leg here, right? So we have this here, let me mark it out as the low, and this here as a high. So we're looking for a retracement, and we're looking for an order block potentially for price to react from. Now we have these order blocks here because obviously on a high time frame that will be one candle. So that's a potential order block we can take a trade from. Okay, now we also have this order block here, which is the one that I had my eye on today. Oops, let's refine that a little bit more. So there we go, and we can see that price reacts from this order block but not this order block. So why doesn't it? And the answer is liquidity. Now, as we can see, we have a build-up of liquidity here. Now you could call it equals, or I like to call it trend line because it looks more of a trend line. If I go down to 3 minute, it makes more sense, right? Go back to the 5 minute. We have trend line liquidity here. Okay, now price is coming down. What else can we see? We have more trend line liquidity. That price goes, grabs, pulls down, okay, taps into our order block. So this is where we enter our trade. Okay, and now looking at and mapping out liquidity doesn't really end once we're entered into a trade. Okay, it continues, right? Because at the end of the day, this liquidity has been taken, so we can remove this now. Now, what else do we have? Oh, look, we have equals. So our target for the trade is, right, price should come and purge this liquidity at the least, basically. You know, that's a 1 to 7. What else do we see? Now, once we're in the trade, what do we see? Price starts to move down slowly. Now, this is quite a corrective move, which basically tells us that, you know, impulsive, corrective, we should get an impulse from here, which is good. But also, what is it? It's liquidity being built up to the upside. You're in a trade where you're looking for longs, or you're in a long, and price is building liquidity to the upside. That's a good sign. So if we go back to the 5 minute, just so it's a bit clearer, and you know, price impulses away nicely, comes in, and look what it's done. And it's taken that liquidity. So the liquidity from here to there, it's taken that liquidity, and as you can see from this trade, you could have taken a 1 to 8 risk to reward trade just from using an order block and liquidity. And obviously we're in bullish structure. You can see prices moving bullish, and that's it. You got a nice 1 to 8, and that's all you really need to know, really. That's it. So as you can see, you don't take a trade directly from liquidity, but you use it as a confluence to tell a story and to aid why price is going to go in the direction you want it to once you've taken that trade. And that's all I really wanted to go. This is a live example from today. You can check the date. Thank you for watching this video. Make sure to like and subscribe. And on Sunday, I will be releasing a case study from EU for one of the best trades that I've taken this week, and I will share that with you on Sunday around maybe 6-7 p.m. Thanks for watching, and see you in the next video.